Hello, entrepreneurs. Today we're going to cover module 7, a series number 2 that I had promised you guys that we're going to do, where we're focusing now on the transactions. But I also decided to add another component, which is the business rules that are not necessarily being taught or known in general when business is understood. And those also do influence how you will actually make decisions and make money or be broke because it can be either or. So leave me comments and details as to how you will want these to be done. I'm only just going to briefly explain those rules and then focus on today's thing. If you want more on that, we'll do a video. I actually have 20 of these rules, but I will just introduce the 10. If you want more, let me know. So let's go on the financial concept, focusing on the transactions. Okay, so this is part of series 2 of financial concept, which is part of module 7 under the Finance Success Program. So we're going to mainly focus on business activities, what does not get taught, as I said, those 10 business rules. And number 3, we're going to look at how do the transaction get classified, what assumptions do we have to make, and why are we making them for this example, and we'll also look at how that information get actually summarized and then reading the financial statements. Okay, so business activities are basically decisions that we make as entrepreneurs that we decide on, and those then come to be transactions. They get written down as transactions. And some of us as entrepreneurs were not good in writing down the business transactions. But we make a conscious decision and decide on which industry we want to invest in. We then decide to sell specific goods and services to a specific person whom is our customer or target market. We also then buy goods and services from specific person or entity. Bottom line is the aim of business is to buy less than what you will sell that item for, which then leads to profit. No profit means the business is not a going concern and also it's not sustainable. But what you also have to keep in mind is that we need to understand that how we make these decisions is influenced by what we believe, and it's also influenced by the emotions this belief triggers and also the thoughts that we have. So, which then lead me to the business rules that are not taught in business classes. I think out of this session, what I want you to understand is that the transactions, yes, get made on who to sell what, when, or who to buy from what, when, but it's all that is influenced by the economics, but its majority of it is influenced by these rules. And these rules are generally not taught. I mean, I learned some of these through experience, and some of them were taught to me when I figured out certain things. I think number 1, I will start with this one: sell before you buy. Most entrepreneurs believe I need to have factors of production first. I need to have this in first before I can get in a custom. No, you can go and sell something that you do not have yet, but you sell a promise, you sell a specific value. If there is an interest in it, you will then go and buy, but you have to sell before you buy. 2, business is built from a trust. If the network you have around you or people that are around you do not trust you, they won't buy from you. 3, Your network that you have built or that you have around you determine your earnings. Your self-worth, number 4, your self-worth will determine your price in the market. If you value yourself less, or you value what you're bringing into the market at a lesser value, then the market will pay you lesser value than even what you are asking for. So number 5, your growth of income is based on a personal growth. Therefore, you have to invest on yourself daily. It's not a once-off thing. It's a commitment of saying, when my earnings stop growing, it means I have stopped growing myself. Number 6, the market determines the price based on your position also and affordability. So it's not just your self-worth, but it's also going to be how you have positioned your products or yourself, and also the affordability of the target market. You can offer the best price and the best product, but if the customer cannot afford what you're offering, then you will not have the right attraction. Number 7, no one builds a business alone. You need a tribe, a community around you. So you're gonna need to figure out, as you're building up your business, build a tribe, build followers. And that is how you're gonna build your business. Number 8, you are what you believe, and you become what you think about. So what do you believe in? I spoke about that in the previous session, which was for module 7, that your beliefs comes from your family, your friends, your economical status, your education, the environment where you come from, and the need, how you are interpreting that data, that information. And that triggers the emotions, certain emotions around applying those beliefs. And this could be internal and external, but it's almost like once you believe something, you then you internalize it. It triggers certain emotions, and those emotions somehow also influence your thoughts and your feelings around it. So these thoughts will tell you what you should or should not do. But most of the time, some of these beliefs may not even be true. So you gotta need to understand that whatever that you believe is what you actually, who you are, but who you are could actually be the reason why you're broke, or you have worth, or you have money, or you don't have money. And what you think about determines also what you will become. So if you think, you know what, this economy is in recession, there's no one who's gonna buy from me, and a whole list of things, therefore, you are not going to do much about it. You're also going to feel like a victim. You're also not going to figure out ways of making sure that your product reaches to the market. So it's really around who you are. And that is why it's important to constantly be checking yourself on the mirror and look at yourself and say, do I like what I see? Is what I see matches where I want to be? Because if it doesn't match, then you're gonna need to bring yourself and the goal that you want to be merging together, so that your identity of who you are now changes and transform to be the person that you are destined to be, or the person that you want to actually achieve. So I will run more videos on this issue, because I have written a book about beliefs, thoughts, and also emotions and so on. So I hope you will follow that also. Number 9, business is built over time. You gotta need to give yourself at least 3 years to see real value. And in other instances, in a real tough market where the competition is high, where your unique selling proposition is not clear, it might actually take you longer. The last one is business is about systems and processes. If you don't build it, you have no business. That's the bottom line. And I have 20 of these rules. Some of these rules I learned from my own experience, and most of it was also from me figuring out things that worked and didn't work. And by the way, none of these were taught during my years in business classes. Is the stuff I picked up, is the stuff that I learned, is the stuff that is really self-taught. Okay. I have mentioned the world of finance on how it integrates up to from the finance in terms of microeconomics, but all the way down to how we are recording transactions. I think what you have to understand is that finance is not necessarily corporate finance, but it's also not financial management, and financial management is also not accounting. Accounting is not bookkeeping. By you having a different levels of understanding on how these integrate with each other allows you to step from being a person who is making a decision, executing the transaction, but also be the person who has to think about where does this come from and how is this fitting in terms of how management and creation of money actually works. Because the bottom line, when you do not understand and differentiate between these two, you will struggle to figure out what needs to be done when. Okay, so in any economy, you only deal with four things. That is income, expenditure, asset, and debt. So income is what you are earning. And then expenditure is what you have spent money on, and asset is the things that you own, and debt is what you owe other people. So basically, that's it. No matter how big or small your business is, it always, when it comes to finance, it boils down to these four things. And financial statements of these four things basically is how we measure the success of the business. If we are not monitoring this as entrepreneurs, we have no business being in business. Now, when we are making these decisions on these four things, we are basically, as I said, it's an income. How much money has come in, how much money has been spent. So the income is an inflow, the expenditure is an outflow. Income less expenditure gives us the profit. If the income is less, then it will give us a loss. So that is how we measure performance. And then when we look at position, which is basically a balance sheet, we're looking at the asset. The things that we own, less debt, which is liabilities, is the things that we owe other people. So asset can be short-term or long-term. Debt also can be short-term or long-term. And generally in asset, we're talking about current liabilities when it's short-term. And when it's long-term, we talk about fixed asset or CapEx. And I will explain that in other modules. But for now, I just want you to get the simplicity of it. Now, taking that understanding of this, I am now going to do the transactions. And this is just a very simple example, just to explain how transactions actually work or activities work in a business. And this is just 1 week. So the first transaction we have, we bought a till machine. Number 2, so what is a till machine? A till machine is something that you're going to use over time. So you are estimating that you will use it more than 12 months. So because you're going to use it more than 12 months, then it's going to be classified as a fixed asset. And that is what we also will, accountants will call it property and plant and equipment or machinery. So that is the machine. And this machine was bought for cash, right? So how is this going to go to your books? It's going to go to your balance sheet because it's an asset. And this asset, there's an error here. Hang on. There's an error. Give me a second. Let me just fix it. This will be 500. Okay, it's an asset. That's the machine. that is the machine, that is asset. So that is now gonna be that machinery. I'm gonna highlight it each time when I finish so that you are able to see with me. Okay, let's go back. Okay, so the transaction number 2 is gonna be paying the rent deposit of 1,000 rand and also paying rent that cost us 300 rand. Okay, so there's a deposit and there's a monthly rent. So a deposit is gonna be what we call a prepaid or advance. That is gonna go to the balance sheet. And then rent is what we call as an expense. So again, let's go to the expense. So the expense here is the rent. Here is the rent. I will highlight it. Here is the rent of 300 rand. And then we go to prepaid of expenses. Here is that 1,000 rand that we have paid. Why? Because this is an asset. If you decide to leave this place that you have rented, that deposit is due to you, depending on the conditions attached to it. So other landlords may put conditions like, if there's nothing that is destroyed, or you are not late with your rent, then you will get it. So that's a deposit that is in. Okay, so, and then we go to the other transaction on here. We then say the number 3 is saying bought 100 stock items of pairs of shoes for 2,000 rand. That means the pair of shoe is 200 rand, right? So again, when you are buying this is a stock. Therefore, you have bought this. That is what you have there as a cost. What is your purchases? You can decide to work out cost of sales using purchases, or you can decide to work it out as a net effect after you have sold it. So for now, you can actually use that, but then you can have another option of actually saying, okay, the shoes that we have bought, how we're gonna put them on the system, but that is the income statement. You bought the shoes, that is actually purchases, right? And then there was no closing stock. The next transaction says you have a contribution. So for you to do all these 4 transactions, you had made a contribution to your business. That money will go straight into your share capital. That is 100,000. But the other side of that is going to go through your bank, because you actually have put the money into the business. All the money that goes into the business goes through to your bank account. So it's here. I'll highlight it here. Okay. And then there's a contribution there. Okay. So, and then that's an income statement. A balance sheet. It doesn't affect the income statement. The next number 5 transaction is that you have sold the shoes. You sell them for both credit and also for cash. So, and the cash transaction were 2,325 and the credit is actually 1,000. So what's going to happen is that you sold these shoes in total for how much? 3,325. Now you're going to see that on your sales. So you see there is a credit and here is the cash, and that gives you the total. Please take note that the sales would include both credit and sales and cash sales. So both credit and cash sales are actually included there. Okay, I will highlight that, what we have done so far. And then this one we also have done. Okay, and then the next transaction we have is that at the end of the week, we have sold 95 shoes at 35 rand, and we also have only 5 pairs left. So you can work out your cost of sales by saying less shoes bought, and then you left, but you're gonna then be left with the cost of sales. And you can calculate it, as I said, this way, or you can calculate the other way around. Either or, you still get to the same amount on your cost of sales. And now you have a gross profit. So your gross profit is sales less cost of sales. Cost of sales, always remember, is direct cost. And now you have the last transaction where you're paying wages or salaries, which is going to be 10 Rand. And then the salaries and wages should be 10 Rand. But I think there's an error here. I think that should be 100 Rand. I hope this is correct. Let's see. 1,400 less, yeah, it's 100. So that then makes up 1,025. So that should be wages of 100. Okay. So the wages of 100 then are here. And please note, and now you're gonna say these are operational expenses less, then gives you a net profit, right? So now you have what? Financial performance, which is what we call income statement. And then on the balance sheet, you're gonna take the net profit that you got here, and that is gonna be the retained income of 1025, and you add with the contribution gives you 11,025. And then on the assets, and this is gonna include long-term, which is fixed assets, and current assets. So here you can just say fixed assets. And then the short-term, this next 1,000 is the person that owe you money that you sold to for credit. And this 100 is the wages, hang on, is the stock that, is the stock that you are left with that you have not sold. Okay, so that's gonna be plus. And then that will then give you 2,100. And then you have the bank. Bank basically is gonna take into account all the movement of money. This 500 Rand relates to the machine that we bought. Look, it's a minus. And this 1,300 is a deposit that we took out and paid the landlord, and also the 2,000 for the stock, plus also the 2,300 that we received, that is money in because we had a sale, but also minusing the 100 Rand of the wages. So it's the movement of all the cash that went through, and that will give you. Do you see that the balance sheet here balances? So there you go, the balance sheet balances now. So that is what we call a balance sheet. It provides you with the financial position. Please keep in mind that I have ignored the following things on these transactions. There is no depreciation. So what should have happened in a normal business, after you can do depreciation monthly or quarterly or annually. So that depreciation will have been done on that fixed asset, which is that machine. We have no VAT implication here. VAT implication will have affected your sales turnover. It will have also affected your transaction relating to your current liabilities, because now you will be owing SARS to some extent if your inputs are below your output, which generally is. We also did not take into account the inflation impact because it's just 1 week. Inflation usually is calculated over a period of time, which has to be above 12 months. We also did not take into account the interest on the 10,000 capital that we have put in, including also there could be interest that you are charging people that buy from you, the accounts receivable. Number 5 is we did not consider income tax implication on that 100 Rand that we are paying on salaries. We have looked at it as a gross. However, if you are looking at it in terms of income tax, there will be pay-as-you-earn, SDL, and also UIF implication relating to income tax. We did not consider all of that. For now, we just want to make sure that you understand these basic transactions, how they work, but also how then they relate to financial performance, how they relate to the position with your balance sheet, but also making sure that you understand that even at the simplest form, this should always balance. And I've seen balance sheets that don't balance, but also just for you to understand how to read the financial statements so that when you are sitting with your accountant, you ask credible questions, but you also will know how those figures have worked out. Let me just go through it one more time. One, your sales is made up of both credit and cash sales. Your cost of sales is purchases less cost of sales. So you can count it by taking what was sold and multiply it by unit per price. The other thing also is that sales less cost of sales gives you gross profit, and then less expenses then gives you net profit. Operational expenses are the things that are not necessarily directly attributed to what you're doing. So those are indirect expenses. Keep in mind that when we're looking at balance sheet, we're looking at the position. So the money that you have put in is your contribution. Please note, this can be long-term or short-term. The way we treated it here, we treated it as a share contribution, which is a long-term. You may have had a liability on this as a short-term. You may decide to keep this as a shareholders loan account, which means you will have had a liability of the business owing you that 10,000. Return and income is basically a net profit from the previous period, and it gets rolled forward each period. And then when you're looking at your assets, the fixed asset and short-term asset, keep in mind that things that you are paying in front have to be current assets, is due and payable to you based on the conditions attached. Accounts receivables are people that owe you money. Those are your customers that have not paid you. And on the current asset, we also have to include inventory. And inventory include both finished goods and work in progress and consumables. And bank is basically the movement of money. Please keep in mind, in the bank, we don't have credit, it's really real cash. So obviously, as I always explain, if you understand these basics, it's then going to also be very easy to understand the cash flow statement. I didn't include it here. I want to keep this simple. Get this first. Let the accountants worry about the cash flow and the balancing of it. What you should be making sure is that this is correct and you understand. So your role as an entrepreneur is to make sure that you record this transaction and you are clear. Where are you making money, and you're clear where your position is, so that you can then make an informed decision on how you're going to leverage your assets and improve the efficiency within that. Please let me know what questions you have and leave me comments. I hope this helps you to understand better when it comes to the financial position. Thank you so much. Goodbye.